A lot of people have limited amount of time to spend on the chart to trade or to invest. And this is due to the fact that they have engagements, family, work, and all sorts of things that keep them busy. But in this video, I'm going to share with you a very simple strategy that you can use this strategy to invest. You can also use this strategy to trade. And it's going to take you a very short amount of time to do the analysis, put your alert at the key levels you want to see price revisit. And once price gets to that position, your alert is going to activate. You're going to get the beep on your phone, pull it out, look at that key level, and put your buy limit order, sell limit order, or market execution. Now, the first thing to do, there are two simple steps. The first one is to understand the structure from the bigger time frame. The second one is to understand how to use the Fibonacci. Now, in this case, as you can see, we're working with oil. We're using oil as an example. And we're currently on the 3-month time frame. The reason we're on the 3-month time frame is because we want to have a better perspective of the overall market structure. And as you can see on the overall market structure, we were creating lower high right here. We had a lower high here. We had a lower low. We had another lower high. We had a lower low. Eventually created another lower high. And then a lower low. And as you can see, price nicely expanded to the upside, breaking significant 3-month structure. The moment this structure got broken, my only interest is for a retracement into a discount and an expansion to potentially rally above this low resistance liquidity. Now, the strategy that I teach all our members that have a very limited amount of time to spend on the charts, they literally have like just 5 minutes or 10 minutes max to spend on the charts. The strategy that I teach them is what I'm going to show you in this video. The moment you go to the bigger time frame, 3-month time frame or 6 months or 12-month time frame, and you mark out the structures, it's very simple to understand the bigger time frame. Where it gets complex in trading is when you start to scale down into the smaller time frame, 5 minutes, 3 minutes, 2 minutes, 1 minute. You don't need to go there. All you need to do with this strategy is to understand the bigger time frame perspective. And as you can see, we were trending to the downside until here we broke structure. After that break of structure, all you got to do is use the Fibonacci from the low to the high. You want to buy from discount. Once price comes below the equilibrium, that's a discount. You're looking for buy opportunities. Now, if we go to 6-month time frame, we go to 12-month time frame. As you can see right here, equilibrium below a discount. Look what's resting right there. Inefficiency. That inefficiency is giving you a telltale sign that this key level is going to be a potential area the price is going to use as a support before a potential continuation to the upside. Now, we go straight down to the lower time frames. What we want to see is, after a mitigation at this key level, we want to see a significant break of structure to the upside. And what do we see right here? We see that price created a high. This is weekly time frame. Created a high. We created a low here. And then we broke structure. Like I said previously, you just have to understand structure and then how to use the Fibonacci. Just 2 things, nothing more. Understand the Fibonacci, understand the structure, higher low, higher high, lower low, lower low, lower low, lower high. The moment you understand that, the next thing is to understand how to use the Fibonacci. Draw the Fibonacci from the overall low to the overall high. Know the discount, premium, extreme discount. Once that is outlined, the next thing you do is to look at structure. And right here, you can see we'll have a high, we'll have a low, we broke structure on the weekly time frame, showing us a telltale sign that right here we have potentially bottomed out after mitigating this equilibrium, tapping into the discount zone. Right here, this was discount. The institutions use this opportunity to accumulate long positions. And look what's resting right here after an expansion to break structure. Now let me show you something beautiful. If you use your Fibonacci from this high, this low created here to this high, let me make this red so you can see how amazing this strategy, how simple, how precise. Let's say you have a very busy schedule and you don't have time to be on the chart. The moment you see price break above this high on the weekly time frame and your alert hits, you use your Fibonacci from this low to this high. This is extreme discount. You want to buy at extreme discount. Look what's resting before the extreme discount, inefficiency, giving you the telltale sign that this inefficiency right here will potentially attract price to the downside. Look at the inefficiency. And look how price came to that inefficiency and failed to close below the inefficiency. Failing to close below the inefficiency, dipping into the extreme discount. This is your opportunity to buy. Now, if you have a very busy schedule and you don't know, you don't have the time to be on the chart every single minute, every single second, this could be a potential area for a buy setup. Right here, stop loss. Take profits. You can target the extreme premium here. This is extreme premium. You can target that. Put your take profits at the extreme premium. Look at what's resting before the extreme premium. Another inefficiency. And inefficiency acts as a magnet to attract price to a certain position. And look what happened right there. Price came straight into that inefficiency. Trade delivered a 1:2.46. This is not just a strategy that I use for trading. I use this strategy for investing as well. So if you're someone who's interested in investing in crude oil, all you gotta wait for is to see the overall break of structure on the higher time frame. The moment you see that, you wait for a break of structure on the weekly, like this, high, low. The moment we break this, mark with the Fibonacci from the low to the high. You want to see price come to extreme discount. This is an opportunity to invest. Let's say you have £10,000 or $10,000 resting in the bank that you've always wanted to invest in crude oil. Extreme discount is where I start to put money into the market. If I had put in, let's say I put in $10,000 right here when price came in here, this low is my invalidation. If price should drop below this low, I am going to take my loss and close that position. And what will be the loss? The loss is going to be 9%. So from that $10,000, the moment I lose $900 right here, price running this low, that means it's invalid. I'll take that loss and I'm out. And look at the profit, 22.3%, $2,200 profit right there, clean. Spending 5 minutes to place that trade. That is all it's gonna take. 5 minutes of my time, place that trade, and I'm back to whatever I'm doing. Now, this is just one example. I'm going to show you another example. Now, as you can see right here, after this mitigation, I'll remove this. After this mitigation right here, the extreme discount inefficiency, we expanded higher. Now, if you draw the Fibonacci from this overall high to this low, newly created low, you can see that this key level here, this is our extreme discount zone. You can see how this works time and time again. Extreme discount zone, look what happened to that extreme discount zone. After an expansion, price went into this extreme premium here, inefficiency, we came back down to an extreme discount. This is another opportunity for a buy. So let's say you got in here, you had £10,000 resting in the bank, you put in 5K here, and then price come back here, you put in another 5K here, and look, both investments are in profit. And this would have taken you 5 minutes for this entry, another 5 minutes for this entry, and look how price nicely rejected off that key level impulsively. So this strategy works. I've literally shown you 2 solid examples price, respecting structure, respecting the extreme discount zones on the Fibonacci level. It's absolutely incredible strategy that I've taught so many of our members, and they're using it to make a killing in the market. So if you want to learn more about how we do this, if you want to join our mentorship program that we're going to be starting soon, feel free to drop me a message right now and get yourself signed up. I appreciate you for watching this video from beginning to the end. If you have any questions, feel free to drop it in the comment sections. And don't forget to do all the social media stuff, like, comments. I'll see you all next time.